Today's episode is brought to you by Roosters, a Noble Grill in Winston-Salem, North Carolina. They provide an upscale menu of Southern food and dishes with international influences made from local ingredients. More info on them at the end of the episode.
Welcome to the Semmax Way, the definitive podcast for mastering finance, investment, and retirement planning. Prepare to unlock the secrets to financial success as we delve into lucrative investment strategies and provide expert guidance towards a secure retirement. With over 20 years of experience, Semmax Financial Group has been dedicated to serving investors, and through this podcast, we aim to empower you with the knowledge to maximize your savings and achieve lasting financial freedom the Semmax Way. Whether you're a professional finance enthusiast, a high net worth individual, or part of a sophisticated investment group, this podcast is tailor-made for you. And now, here is your host, Matt Landon, financial advisor for Semmax Financial Group and licensed CFP.
Remember this, whoever sows sparingly will also reap sparingly, and whoever sows generously will also reap generously. Each of you should give as you have decided in your heart to give, not reluctantly or under compulsion, for God loves a cheerful giver. That comes from 2 Corinthians chapter 9, verses 6 through 8, and it touches on something that I wanted to talk about today. We're coming up on Christmas. It's the holiday season, and giving and gifts are kind of top of mind. I remember growing up as a kid, I loved Christmas morning. You run out, you look in the living room, you see what presents are underneath the tree. And growing up as a pastor's kid, we did not always have a huge amount of money. And so the presents, sometimes they were more practical. Sometimes they were a little bit more fun. You know, it might be something like a bike or a different toy, but some years it was a lot of socks and different things like that. So something my parents did to make it fun every year was they would label the presents for each kid, but it didn't have your name on it. One year, it was different colored dots. Everybody had their own colored dot. One year, it was different types of wrapping paper, and all the presents for one color wrapping paper were for one kid, and for a different color wrapping paper for another kid. And so it was just different things that made Christmas fun, because before we ever got down to opening up presents, we had to figure out and sort into the different piles of who had what, and then determining which kid actually got that pile. And so it was a lot of fun, and it made the Christmas morning stretch out a little bit, you know, and it made the anticipation be a little bit more. And we always enjoyed trying to figure out who had what. And so I think the dots was my favorite, because there was really no rhyme or reason to it. It wasn't tied to our favorite colors. There was nothing there. But at the same time, we were all excited about getting our presents, right? We were all excited about getting our gifts as kids. And my parents loved watching us open them. And it was less about the present than the action of giving and receiving. That's what makes it the most fun. I think today, one of my favorite things to do at Christmas time is come up with a present and give someone something that you know they're going to love and they're absolutely not going to expect. It's always nice getting something that you know you wanted, but I also think there's something beautiful in getting a present that's just a total surprise and you know they're not expecting it, and I love being able to do that. I also think this is a wonderful time of year for giving to different charities. And there's a lot of different ways you can do that. And so what I wanted to talk about today just a little bit is around gifting. It's around giving of gifts. I think there's a little bit of a misunderstanding around gifting when it comes to giving to family members and what you can and can't do. And so I'm hoping to shed a little bit of light on that. Maybe bring a little bit more clarity and some understanding to how all of that works. So I want to start with talking about the giving of gifts when it comes to estate tax. So what is the gift tax limit, right? How does that work? Why do we even have a gift tax limit and things of that nature? So let's dive right on in. The gift tax limit for 2023 is $17,000. Now, what that means is for any individual that you're going to give, you cannot give them a gift or give them a cash or something that's worth more than $17,000 without running into gift taxes. So it's called the gift tax limit. It's formally called the annual gift tax exclusion, and it's the maximum amount you can give to a single person without reporting it to the IRS. Now, I know what you might be thinking, and it's actually the same thing I'm thinking, which is, why does the IRS care what I do from a gift standpoint? Why do they care what I give to my loved ones, to family, to friends, even to strangers? Like, what difference does it make? What's the point here? Well, the key thing to keep in mind is, from a charitable giving standpoint, you can only deduct a certain amount, right? But we're not talking about charity here. We're talking about gifting to family members, right? To friends, to things of that nature. So why does the IRS care about that? Well, to get into that, you really have to understand a little bit of our history and understand estate tax history. So going back in time, all the way back on July 1st, 1862, the U.S. Congress enacted a duty or a tax, and that was with respect to certain legacies or distributive shares that come from personal property, either by will or by dying intestate, and that was from deceased persons. Now, the modern tax, this estate tax, was enacted on September 8th, 1916, and that was under Section 201 of the Revenue Act of 1916. Now, here's the fun thing. They first introduced gift taxes in 1924. It was repealed in 26, and then it was reintroduced in 1932. So you had estate taxes hit the code in 1916, and we didn't really have gift taxes hit until 1932. And it kind of got codified and solidified in an interesting way. Here's what happened. When it comes to estate taxes, for a few years, if you passed away, you had an estate. That estate would be taxed. Now, right now, under today, this is 2023, you can leave $12.92 million to someone before you have to worry about estate taxes. And the estate tax has a range. It's anywhere from 18 to 40%. For most of us, we're not too worried about leaving $12.9 million, right? Because the cool thing is it's portable. And there's an unlimited amount you can leave to a spouse, and whatever I don't use from an estate standpoint, my wife can take over. So Kristen can take over. So if I were to pass away, Kristen would be able to leave an estate not of 12.9 million. It would actually be 12.9 million times 2, right? So she can leave a little bit over $25,800,000 before she has to worry about paying estate taxes. That's pretty cool. Okay. So for most of us, we're not too worried about estate taxes. But back in the day, that limit was significantly lower. At one point in time, it was only $500,000. Now, when you talk about your total estate, we are including the value of your home, your cars, your house, everything you have, the value of your 401k, the value of your life insurance. You're thinking, well, wait a minute, life insurance isn't taxed. Well, it's not, but it is included as part of your total estate. So it's not that hard to get to $500,000. If you think about a lot of retirees, it's really not that hard to get to an estate of $500,000. And what that meant was anything over that limit of $500,000 was assessed up to a 40% penalty or tax, right? The estate tax. So what happened was, after the estate tax was enacted, all of these folks realized what was going on. And when they were on their deathbed, they would say, hey, come on, Judy, come here. Frank, Bob, Billy, everybody, come here. Frank, you get my house. I bequeath my house to you. Signs it over. Judy, you get all my cars. Signs them over. Bob, here, you get this. Phil, you get this. And then they would pass away. And everyone went, oh my goodness, did you hear? It's a tragedy. So-and-so passed away. He died penniless. He had no estate. And then the IRS, after a while, this is where the government comes along and they go, all right, come on now. Whether you do it while you're living or whether you do it while you pass away, you can only have so much money before you got to worry about taxes. So that's where the modern day gift tax really came from. I mean, if you think about it, they're saying whether you gift it in your passing or whether you gift it while you're living, you can only give away so much money. So where it comes to today is you can only give $17,000 before you have to start worrying about this gift tax and start reporting things to the IRS. Well, a lot of people go, wait a minute, I don't want to only give $17,000. Maybe my daughter is trying to put a down payment on a house and I want to give her $100,000. Does this mean I'm on the hook for 40% taxes on $83,000? I don't want to do that. How do we get around it? Well, remember, the idea here is to avoid estate taxes. That's what they're trying to keep you from avoiding. So what you can do is you can take that $83,000 that's above the gift tax limit, and you can report it to the IRS. And what happens is your estate tax exemption gets reduced by that amount. So you can no longer leave $12.92 million. You can now only leave $12.837. Not a huge difference. So as long as you stay on top of it, you can actually give a gift. You can give something today without it ruining your estate taxes, without it causing you a gift tax. Of course, you want to talk to your CPA and things of that nature. But I want you to take away from this an understanding of the reason we have estate taxes, the reason we have gift taxes go hand in hand. So gift taxes are just their way of saying whether you gift it while you're living or when you pass away, the government wants their cut, but they give us an exception. And so then what we also do is we look at it and we say, okay, I don't want to pay that. Just reduce what I'm allowed to leave in my estate, and we don't have to pay it today. So going back to that example of $100,000 you want to give to your daughter as a down payment on a house, you can only use a gift tax of the 17. Well, that remaining difference, that $83,000 at a 40% tax, that could be $33,000. An additional $200. So it'd be $33,200 that you're paying in taxes. I don't know about you, but I don't really want to do that. And so you just report it. You've got no problems. I'm going to do a whole separate podcast talking about charitable gifting. There's a ton you can get into on that. But for this, I hope the takeaway that you understand is maybe just a little bit more about gift taxes, what they are, how they came about, and understand that it's something you need to be aware of and you have to do it the right way, but it shouldn't cause a huge problem. I'm going to leave you with a quote from one of my absolute favorite authors. He's a phenomenal public speaker as well, but John C. Maxwell has written over 50 books on leadership and different things, and he has a quote about giving that I think is absolutely phenomenal. He says, when you give to help others, builds them up enough that they are able to give to others. It's a cycle that can continue long after you're dead and gone. I think we all want to have a legacy. We all want to give and be part of something greater than just ourselves. And I think that when you give with the right heart, with the right mindset, with no strings attached, but to build up others, it's a beautiful cycle. You're patterning Christ. You are patterning a biblical principle that I think is absolutely phenomenal. I don't believe that you should give with this expectation of getting something back. I started with 2 Corinthians, and I just want to remind you that it says whoever sows sparingly will also reap sparingly, and whoever sows generously will also reap generously. Each of you should give what you've decided in your heart to give, not reluctantly or under compulsion, for God loves a cheerful giver. If you feel obligated to give, whether it's to the church, whether it's to family, etc., I don't think that's the right way to do it. But I do believe that we have a responsibility to be good stewards of what we've been blessed with, and also to lend a helping hand to one another and to give with a cheerful heart. I hope you all have a wonderful day. I hope this has been beneficial. Thanks for listening. And again, we're going to do another one where we talk about charitable gifting. This was more to family members, but I hope you took something away from this. I enjoy doing this, and God bless.
Thanks for joining us for another episode of the Semmax Way. If you're not completely satisfied with your current financial advisor, give us a call for a second opinion. Please note that this podcast is intended for informational and entertainment purposes only. The content shared on the Semmax Way should not be considered as investment advice. It is always recommended consult your licensed investment representative and a competent tax advisor, respectively, for your fiduciary needs and plans. No statement contained in the Semmax Way podcast or made by its producers, sponsors, host Matt Landon, or Semmax Financial Group is a recommendation. Semmax Financial Group and Matt Landon are not responsible or liable for investment value loss of any kind from any action taken based on information discussed in the Semmax Way podcast. Any opinions or viewpoints in this podcast are shared for information and entertainment purposes only and are not financial advice. We do encourage you to conduct further research and seek personalized advice for your specific financial circumstances. Full disclosure available at semmax.com/podcast. Thank you for joining us, and we look forward to having you tune in for future episodes of the Semmax Way.
I'd like to pause a minute and just express our gratitude to our podcast sponsors, Nobles Food and Pursuits. This renowned restaurant group has been serving the community for an impressive 40 years, starting with Jim Noble's original restaurant, J. Basil Noble in High Point. Over the years, their passion for hospitality has flourished, leading them to expand into a diverse collection of 9 restaurants, a retail bakery, and a catering company. Today, we want to shine a spotlight on one of their beloved establishments, Rooster's A Noble Grill, which has been proudly open for 31 years right here in Winston-Salem. Now, Rooster's is known for its commitment to offering a seasonally inspired, regionally cultivated menu featuring mouth-watering wood-fired meats, poultry, and vegetables. If you're looking for a delightful dining experience, they also host monthly wine dinners and provide live music on their inviting patio every Tuesday night. Now, make sure to pay them a visit at 380 Knollwood Street, and to secure your spot, head over to theroosterskitchen.com and make a reservation. Again, that's roosterskitchen.com.